68.85. He's in Chicago with Blue Line Futures. Oliver Slope. All right, Oliver, let's start with the corn market. Have we done technical damage in this corn market?
We did a lot of technical damage really over the last 2 weeks. For the month, last month we were down 31.5 cents, half that coming from last week where we really broke below a lot of the major moving averages, which is now going to act as a little bit of a resistance point or a pivot pocket for us, that 20-day moving average specifically at 451. If we can see consecutive closes out above there, potentially we start to repair some of the damage that was done. Over the last couple of weeks, you and I have talked about kind of the conflict between the fundamentals and technicals. Fundamentally, I think this market has reason to firm up and rally. Technically, a lot of damage was done. So when those two are kind of pushing and pulling against each other, I think it's a little bit of a caution flag. If we can kind of regain, again, some ground back above some of those major moving averages, potentially that is the tide that can right the ship here. And so far, to start a new month, we're off to a pretty decent start.
All right, but still we've got pressure in this bean market. Is that tied to maybe uncertainty in the biofuel sector?
A lot of uncertainty in the biofuel sector, as well as the trade with China. I know that there were some positive headlines towards the end of last week, and that was kind of walked back. I just got a headline here within the last couple of minutes that Trump and President Xi are supposed to speak here soon, maybe later this afternoon. And so you're starting to see prices come off these early morning lows a little bit, but still have a lot of work to do to repair the damage that was done. We talked about the major moving averages in corn. Similar to that, you can see it in soybeans. We broke below a cluster of major moving averages, the 20, the 50, the 100, and the 200-day moving averages, all for July beans, 1045 to 1055. So that's now going to be a significant resistance pocket for the market. The low end of the range for May, 1035. If we cannot hold ground there, there is air underneath us. So we're at a bit of an inflection point as far as support goes for this market.
And then I hate to let you go before we talk wheat real quick, and we're watching a rally right now. What are you seeing?
I think there's some weather concerns, and then obviously some geopolitical fears out in the Black Sea region where things have escalated over the weekend. And that, on top of funds being short roughly 100,000 futures and options contracts and being net short for the better part of the last 2 years, I think you're starting to see some short covering. We talked about moving averages. That's the theme to start the month. The 50-day comes in at 543. We have not closed above that since March. So if we can close out above that, potentially that spurs a little bit more technical momentum here to start a new month.
All right, Oliver, I said before I let you go, you got to hang on. We're going to take a break, but when we come back, we'll talk livestock futures. I'm really interested to hear your thoughts in the pork market. Market Day Report continues in a moment. Impressive, but Oliver Slope with Blue Line Futures. Can we go back and retest the highs from February?
It certainly feels like it. We've had a heck of a run here over the last week, and despite the rally and the fund momentum and participation really picking up, the market still isn't in overbought territory, and we're knocking against those highs from May. And above that, you're looking at the contract highs, as you had mentioned, from February up at 106.70. So a lot of good technical and fundamental momentum in this market. Funds, I had mentioned, the Commitment to Traders report showed them adding to their net long position yet again. That's the 7th straight week of funds being net buyers. So they say the trend is your friend until the end when it bends. And right now that money is flowing back into the lean hog market. I do think that we can potentially squeeze a little bit higher and maybe make new contract highs, but there is a little bit of a caution flag. In the next 2 weeks or so, you start to see seasonal weakness kick in. So if you do have some downside to protect, I would start being a little bit more proactive so you don't have to be reactive later on.
All right. And again, I learned something this morning looking at Friday's weekly ag energy roundup from USDA, and it's white grease. And I was looking at the chart and going, what in the world is this white grease? Pork fat used for biodiesel production. And I'm going to use that as a segue to move over to crude oil. Have you been watching that rally?
Crude oil has had a nice rally. We talked about some conflicting headlines and things in the grain markets, and you're seeing the conflicting headlines in the energy complex as well. We had an OPEC meeting over the weekend. They did increase production yet again, the second straight month of doing so, but the market is higher. I think you've got some tensions in the Black Sea region picking up and in the Middle East that has added a little bit of premium to that. On top of that, we had the rig count on Friday afternoon, which was the lowest rig number, I think, since 2021. So a drop in rigs, and we always say low prices do cure low prices. You're starting to see that, I think, become a little bit more evident at these levels, especially with the rig counts dropping like they have over the last several weeks.
And I'll wrap us up with the rest here. Gasoline futures moving higher here at the morning trade. Diesel prices moving higher. And what about nat gas? Yep, nat gas moving higher as well. The entire energy sector is in positive territory. Oliver Slopes with Blue Line Futures. And by the way, love the artwork over his left shoulder. That apparently is the much celebrated artist, 2-year-old Arthur.
Yes, yeah. Great artwork.
Yeah.
So he said just a commitment to excellence in everything he does at 2 years old.
I love to see kids' artwork.